We're back on BloxLive TV. Today is Wednesday, May the 8th. We're now live with the latest in the crypto world. It's 9:30 a.m. in New York City, 2:30 p.m. in London, 10:30 p.m. in Tokyo, and 3:30 p.m. here in Malta. Well, we have a cybersecurity expert in studio as well as our crypto analyst discussing the breaking news of the Binance exchange hack on our show today. But first, here are the latest moves on the markets. Now, the cryptocurrency index CCI 30 has slipped back below the 3,000 point mark. It's gained 1% so far in May and trades 36% in the green year to date. Now, despite the most recent rise, the 30-day Bitcoin volatility index remains virtually unchanged yesterday at just over 2.2%. Trading remains active, but the CoinMarketCap website's 24-hour volume indicator has eased back towards the $50 billion mark. The real-time volume on the Messari website has shown no significant moves as it stands close to $1.6 billion level. Now, the crypto king continues outperforming the altcoins, and the Bitcoin dominance indicator has edged above the 56% line. The top 5 digital assets are all trading in the red. Bitcoin dipped below the $5,800 mark, but it has now recovered most of the loss. Ether has reclaimed some of the ground as well to trade at more than $170. XRP trades near the key 30-cent psychological level, and Bitcoin Cash is priced at $286 on a daily decline of close to 3%. Litecoin currently stands at $74. The altcoin is 3.5% in the red. Now, as we can see here, the Coin 360 heat map shows a mostly red picture as the digital assets gave up some of the recent gains. Now, according to the Token Spread website, the Bitcoin premium we have recently seen on the Bitfinex exchange has declined by about 2% to less than 5% today. The CX exchange shows the single peak market spread of 0.28%. We'll now take a quick look at some of the characteristics of Orbs. It's a layer built on top of the Ethereum blockchain to facilitate applications and virtual chains. Now, this combination provides developers with a scalable ecosystem that has low fees. Virtual chains are running on top of shared physical node infrastructure. The platform's economy is fueled by the Orbs token. It was added on the CoinMarketCap website just over a month ago, and the token trades at just over 3 cents. The asset's total valuation of nearly $53 million makes it one of the top 100 cryptos by market cap. Well, let's now take a quick look at some of the performance of the various cryptocurrency asset classes as categorized by the Messari website. Let's start with the infrastructure group, which posts a sharp decline of 4.2%. The MaidSafe coin is one of the only assets that are trading in the green. The media and entertainment category is the most bearish asset, with a drop of 4.5%. There is red across the table here. The financial sector shows the least decline with a move south of 2.5%. DigixDAO and Komodo are providing bullish support for this group. The currency category shows a decline of slightly less than 3%. Dancoin and Tron actually buck the bearish trend with slight gains. Lastly, the services section is 3% in the red. MaidSafe Coin and Ravane show increases on this generally bearish day. Well, that's where the 5 major cryptocurrency categories stand so far on this Wednesday. Let's now take a quick look at some of the most significant gainers and the biggest decliners among the top 100 cryptocurrencies. Well, these were the top 24-hour moves during the European morning trading session on this Wednesday. Join me after a very short break. We'll be with our cryptocurrency market experts and our cybersecurity expert to talk about the biggest talking points of the day.
There are 180 different countries all around the world, which makes us grow in like a sphere.
We are stronger than ever.
Have these questions answered without disclosing anything.
AI field is mostly controlled by a few large corporations.
Much busier, bigger than ever.
In the mid-2020s. I do think that will come.
We should kind of keep in mind that we want the world to be a better place.
$15 billion a day. This is incredible.
People find a way to create infrastructure.
I think knowledge is one of the most important things in the world.
We laid the foundation for the distributed trust model that Satoshi builds on.
It does come with some risks, but at the same time, I think it's an opportunity for countries.
Individuals miss the boat on a market, they miss the boat. When the institutions miss the boat, they bring the boat back.
This is BloxLive TV.
Want to learn how to increase your profits? Learn the skills and techniques needed to get more traffic, leads, and sales. We've assembled the movers, shakers, and record breakers from across the planet under one roof to share their knowledge on digital marketing strategies that are working right now. Network, be entertained, get inspired, and leave with a proven plan for building and growing your business online. Come join us in sunny Malta on the 17th to the 19th of May at the Grand Hotel Excelsior in Valletta. Don't miss out. Get your tickets now on www.rise.events.
We're back on this Wednesday's Crypto Now live show. We're now here joined up by our experts, Kevin Murcko, CEO of the Coin Metro Exchange, and Jason Fernandez, COO and co-founder of AE Token. We also have cybersecurity expert Jean-Michel as a party in studio today. So thanks everyone so much for joining us on the line today.
Thanks, Jessica.
Pleasure. Now, Kevin and Jason, I'd like to start with you. What a day it has been. Now, Bitcoin has remained close to the $6,000 US mark. We've seen no significant declines, really, despite this Binance hack. Is this a sign that the bulls remain in control? Jason, I'd actually like to start with you today.
I said yesterday that I think that I thought that there was quite a bit of resistance around 6K. And even though Bitcoin was able to get to 59.50 before the Binance news led to a pullback, Bitcoin has still managed to recoup most of the majority of its losses, basically. And I think it should clear 6K sometime next week, if not earlier. So I think a great deal of this, the effect comes down to how Binance chose to handle the situation of the hack. So CZ has said that a fund he created a few months ago, known as a Safe Asset Fund for users, will be covering all losses. And also there was a discussion about a rollback of the Bitcoin blockchain, but they decided against it. And I think that's good because I think that would have hurt Bitcoin and opened it up to a lot of the same criticism around Ethereum and Ethereum Classic. So I think overall, I think things are looking good, and I think we should cross 6K next week. I don't think that the news out of Binance has affected us negatively too much.
And Jason, do you also view this news also as market maturity in some way, how Binance has handled the situation?
Yeah, I mean, on one hand, it's certainly a sign of market maturity that Bitcoin didn't completely crash. But from another perspective, the way that Binance has chosen to deal with the situation sets precedent going forward, and it shows basically that Bitcoin is not the same as Ethereum, and Bitcoin is not going to try to roll back the blockchain just because of some fraud. and essentially that they have other ways to deal with that. And so I think that this sets a precedent, hopefully, that will continue. And also, it saves it saves the reputation pretty much of Bitcoin, because people will start wondering about Bitcoin if the blockchain can just be rolled back.
And Kevin, how are you viewing this news? How are you viewing this fact that this Binance hack, which could have been a huge dent to the market, is it a sign that bulls actually are in control, that the Bitcoin price has remained virtually unchanged?
Well, definitely you have more of a bullish sentiment than we had, several weeks ago. As Jason just mentioned, we've pushed through a lot of previous support, which became resistance, and now it looks like it's becoming support again. We talked a lot at the 4K level. We talked about it again at the 5K level. 6K is very close to 5K euro as well, so we're dealing with some psychological barriers there as well. It surprises me, and it doesn't, that it didn't move the market more. It doesn't surprise me much, given the fact that Binance did handle the situation better than I would have thought they would have handled it. However, it probably could have been handled a bit better, though they definitely have some PR guys working for them now that they probably didn't have a few months ago, which is good news for the entire market, not just for Binance. But the fact that the hack up to this point reported is only quote unquote 7,000 Bitcoin, which they should be able to cover, to be honest, even if they didn't have this SAFU fund from their own revenues that they've reported, they should able to cover this loss. So I think that may into the fact that it didn't have such a hit. However, there has been speculation in the market, considering they said it was too.
And we have got a little bit of technical difficulties with Kevin there. Sorry, Kevin, I'll just stop you there. We'll move on slightly to actually talk about what happened and try and break it down a little bit. Jean-Michel, you are here with us in the studio today. If we look at actually what has happened with the Binance attack, so we've seen that hackers have gained access to a large number of API keys, also two-factor authentication codes. How did they manage to actually do this?
So there's been no report on how this all exactly happened, so everything is purely speculation, basically. There's a couple of ways it could have happened. The first and probably the most logical would be everything would have originated from a phishing attempt. Once said user clicks link or malicious file, a hacker would basically have a little piece of malware within the user's PC, within Binance itself, that would ping a CNC center somewhere outside of the environment. And by doing that, they would then be able to kind of scout the local network and begin some kind of lateral movement to gain access to the API keys. There is the other possible issue, which some people are potentially talking about, regarding insider threats from Binance itself, but again, it's down to speculation. And the other issue is definitely to do with somebody, well, to do with an individual who's providing the 2FA service itself. One really key consideration, which I think was entirely overlooked, is basically the way that 2FA works is it combines three different factors to generate a unique hash, right? So there's a serial number, there is the timestamp, and knowledge, which is the base kind of 2FA. All they had to do to make sure that that 2FA wasn't hacked was add a certificate on top of it, and they would have probably been fine.
And if we watch CZ's AMA that he released today as well, he did acknowledge that actually the hackers have been very patient. It wasn't a short-term issue. Is there still pending threats here, considering the fact that hackers have this data, and should traders actually take any more security measures? If people are trading on Binance, is there anything that they should do now to take extra precaution?
Yes, I mean, to an extent, there are certain things that traders can do, you know, like, for example, don't leave the majority of your funds in a hot wallet. Don't leave any funds in a hot wallet unless you're actually trading them. Keep your passwords to yourself. Change them often. Use 2FA. That being said, we still don't know whether this security breach was due to a lack of security awareness on the trader's side, or a lack of security awareness on the exchange's side. And I imagine it would have happened from the exchange's side, if I had to kind of sort of like just guess here. So I would probably say the responsibility is more down to the exchange rather than the trader. Luckily, they only had 2% of their funds in their hot wallet, and the fallout wasn't too terrible.
It's still quite a good indication that you've given that actually to move it over and take it from your hot wallet, if you are a trader, if you have got a large amount of trades over there, move it over to your own personal wallet if you are looking to protect your assets. So I'm sure some of our viewers will take that on board. Final question for you now, because what we saw is hackers actually only took Bitcoin, which some people are viewing quite interesting as well. Was this to steal as much as possible, or do you think it was something to do with triggering any security systems? Do we know if only the hot wallets were affected? Were cold wallets involved as well, or was it just the hot wallets?
So far we know that only the hot wallets been involved. I would say the fact that they stole Bitcoin has nothing to do with security. It's only got to do with the fact that it's the easiest crypto to launder. Simple as that.
Okay, fantastic. Well, thank you so much for coming in on such short notice and giving us a little bit of indication. I'll turn our attention back to Kevin and Jason. Now, Kevin, how have you viewed the situation and what we have seen from Binance as well?
So yeah, hopefully the connection's a little bit better now. I hope at least. As I was saying when we got cut off the last time, is that it was reported that only 2% has been hacked, which I think is probably why we didn't see such a major move in the underlying asset in Bitcoin. Mainly because Binance, has a lot of money in the bank and they can cover that loss. However, when you look at their cold wallets, it actually amounts to much more than 2%. Their public cold wallets only hold about 100 and I think 180 or sorry 300. They should hold around 350,000 if it was only 2%. But they hold something like a varying number, let's say, that would make the hack actually higher than 2%. So that still remains to be seen exactly what the true percentage is. It also remains to be seen a lot of times when you have a situation like this, the true value of the loss doesn't come out right away. And that's not because generally both sides simply lack the transparency. It usually happens because they don't see the depth of the hack initially. And it takes time to actually go through and see exactly what was affected. I would say that there probably is a bit of continuing risk. They have stopped deposits and withdrawals, which, to be honest, probably also is one of the reasons why Bitcoin hasn't moved so much, because Binance being such a major source of trading or a source of liquidity in the market, the fact that no one can deposit to trade probably has mitigated the effect to Bitcoin. I think in the end, this just proves that we're still in an immature market, that aside from just exchanges doing what they need to do to protect client funds, people themselves need to protect their own funds. And at the same time, we need to come up with better ways of actually dealing with trading. There needs to be kind of like tripartite accounts where you can hold your funds by yourself and still trade them on exchanges. These things still haven't come to light in this market, even though they've existed in traditional markets for decades, where I can open an account at a bank, hold my money in that bank, and still trade those funds without the exchange or the broker ever having access to them. And I think that's probably where we're headed. I think instead of the real decentralization push or decentralized exchange push, what you're probably going to see Binance looking into, and this would be my tipping my hat to Binance if they're listening, what you guys need to look into is the ability to do something like a tripartite account. If you guys handle that, then you will maintain your control over the market. That's really has to be the next step.
And you made a really interesting point there, because if we do look back and see 2017, late 2017, and hacks that took place then, we did see more of a price action on Bitcoin. You did say about customers actually protecting their own assets. Do you think that there is anything that traders can do personally? Jean-Michel mentioned moving from a hot wallet and moving into a personal wallet some of your holdings. Is there anything else that traders can do you think, Kevin?
Sure. Look, if it comes down to it that the access really came from the exchange side, obviously the only thing you can do in that point is either not trade on an exchange, or you simply mitigate your risk by only trading, as mentioned by the expert on the panel, that you're willing to lose. Meaning that, and especially once margin trading and leverage is introduced, it makes that easier. Meaning that if you have a €1 million portfolio and you only want to risk 100K, but you can get 10-to-1 leverage, you only really have to risk 10,000 of your actual collateral. So again, as the market matures, it's going to give traders the ability to de-risk. Right now, to de-risk, really you either don't trade at all, or you simply have to mitigate or remove the amount of money that you're actually placing on an exchange. Having said that, we still don't know. I think it's probably a combination here. The fact that they got access to API codes and to 2FA codes leads me to believe that there's probably vulnerabilities at the exchange level. But more than likely, there was phishing attempts, mass phishing attempts at the Binance client level as well. And there was probably many clients clicking on emails that they shouldn't click on. So look, people want a tight experience. They want UI and UX to be, very But so I can say from my own experience on the CoinMetro side, we do a lot of things to protect client funds. We do a lot of things to onboard clients to make sure they're legitimate. And a lot of people complain about these things. People don't want to have to do 2FA. They don't want to have to enter in codes. They don't want to have to go through all these steps. And that's what leads to vulnerability. So it's also just on the side of erring on laziness, to be quite honest, both on the exchange side and on the client side. People simply don't want to have to go through 10 steps to access to their money. But unfortunately, in the world we live in, that's what you need to do. You need to take every precaution imaginable, regardless of how painful it might be to do so.
And now, Jason, I want to turn our attention to you because, Jason, you joined us on the live show yesterday as well. And confidence was something that we were talking about. We were talking about you had this feeling of bullish momentum. The Binance exchange was considering a blockchain rollback. Is this possible now? Would this destroy the confidence in Bitcoin and also in the crypto industry as a whole? What's your thoughts?
Yeah, so I do think that would have destroyed some confidence in Bitcoin. I think that was one of, as per CZ's tweets, he sent out a series of tweets earlier today where he basically explained his thoughts on the situation and why he decided that they weren't going to try to roll back the Bitcoin blockchain. And part of the main concern was that it would negatively affect Bitcoin as an asset and make people think, sort of differently about it. One of the things I do think is interesting about the whole Binance situation is how exactly they're able to transfer the funds out. So Binance requires quite a great deal of verifications depending on the size of the transfer out. And so that is basically meant to prevent something like this. And that obviously failed. And that's because hackers were able to sort of wait and execute actions through multiple what seemed like independent accounts at basically a coordinated attack, and that's basically how they're able to get it out. So I do agree with Kevin that it's probably a problem on the exchange side, and it's also going to be an issue with how you're going to convince users to use 2FA and all these security features when exchanges themselves are getting hacked and essentially making the whole point basically null and void and moot. So it's sort of an issue about how you're going to get traders to continue to use this two-factor authentication, for example, when the exchange itself is not secure. So I think it's a really good sign that Binance is stepping up to the plate and saying, okay, look, it's our mistake. We're taking responsibility. We're going to essentially reimburse these funds, and we're not going to try for a Bitcoin rollback. And I think overall, I think that improves confidence in the market. I think that's pretty much why Bitcoin has stayed so pretty much very close to where it was just before the news, actually.
And Binance have been quite active as well. I think CZ released an AMA around 3 hours ago where he said, I don't think he's slept in around 27 hours. So, Kevin, I want to ask you this now. Can they solve this security breach in a relatively timely manner? What do you think?
Well, obviously they're going to have a lot of eyes on the prize right now. They have a large staff. I'm sure most of their developers, tech, security experts are all looking at this. So I would hope they solve it in a relatively timely fashion. I think it's possible that solved is a strong word. I think finding out the root cause will probably not take too much time. Actually solving that, part of that, is manual verification. Again, nobody likes the fact that in finance you need to do things kind of the slow way every once in a while, right? And I talked about onboarding, and another part of that though is on the exchange level. Look, I say this a lot: when hacks occur, for the most part, they're procedures that aren't followed correctly, right? So if they had 4i identification on those withdrawals, and some of those were manually processed, either based on veracity, meaning the amount, as Jason mentioned, they could have skirted, let's say, flags by just submitting 1,000 small transactions. However, if they had veracity limits, they would have seen that there was a lot of small transactions coming in from, let's say, I don't know, similarly numbered accounts or whatever, and they would have the 4i principle, which every regulated financial institution needs to do, meaning that some other person or a person needs to verify these transactions. Yeah, that might induce some waiting, but they would have found the error quite quickly, and guess what? They probably wouldn't have lost 7,000 Bitcoin. So I think that as regulation comes in, and one of the things that's going to change about this market is how these operating procedures are applied, and I guarantee you that will stop a lot of these so-called hacks, where in the end a lot of these things can really be stopped by human interaction. Meaning, again, it slows things down a bit, but it protects funds much more than most automated processes can.
Fantastic. And now, Kevin and Jason, just quickly, I'd like to ask you both, we are still seeing that markets are in a slight correction. Is this situation going to have a long-term impact? Is there any way this could kind of be a positive learning curve for the markets? What are you expecting moving forward? Jason, we'll start with you.
So I think given the fact that Bitcoin basically made up most of its losses today, I'm not sure that it's a correction so much as a standard resistance level of 6K, and it's basically slowing down as it got close to it. I doubt that the Binance hack will have a long-term effect on the market, but I think the way they actually dealt with it may actually have a long-term effect on the Bitcoin community and essentially having some sort of precedent as to how to deal with this in the future. And obviously this draws a line in the sand, kind of, that Bitcoin is not Ethereum, and it won't go through what Ethereum went through with the whole Ethereum Classic debacle. So I think that's important. I think that could be a lasting effect of this.
Okay, and it removes potentially any correlation in the markets as well. Kevin, what's your thoughts on this?
Look, smart entrepreneurs, smart CEOs learn from everybody else's mistakes, including their own. So I think the one thing that Binance has is they have hindsight. They've seen every other hack that has happened, and they reacted differently, which I give them a +1 for. Having said that, yeah, I think that what's been released so far, the 7,000 Bitcoin, et cetera, is priced in for sure. It's done. We're not going to see any long-lasting market effects because of that. However, if the story changes, that data was hacked, that people got access to emails, maybe phone numbers, a data breach as well. Maybe they got access to information on individuals' phones because of the API keys and because of that could change the situation, and it could cause, it could be, let's say, one of the first not only crypto hacks, but data hacks, major data hacks that have happened in the industry. I'm not saying that's going to happen, but as far as the 7,000 Bitcoin news, it's priced in. Could it be good news over time? Yes, all bad news is good news over time, right? No matter how bad the news is, as long as you can learn from it industry-wide, not just Binance, it's good news for the market. To mature, you have to kind of fall on your face a few times. And obviously this industry has fallen on its face a lot. And this is just another time the industry kind of fell on its face. But every time you fall on your face, you get more agile, and eventually you stop falling on your face. So as the industry goes, I think, yes, it will be positive over time, just like every issue that's ever happened in any industry should be over time positive for that industry.
Resilience is key. Well, Jason and Kevin, thank you so much for joining us on the line. As always, it's a pleasure. Jean-Michel, thank you so much for joining us in studio today. Before we sign off, I do have a last-minute update from our editorial staff regarding the crypto markets. Now, if we take a look, the total market capitalization has shown no significant moves as it stands close to the $185 million mark. Now, there have been no major changes in the cryptocurrency traded volume as well. The CoinMarketCap website's daily measure still stands at just slightly more than $50 billion. That's all for Wednesday's Crypto Now live show. We thank Kevin Murcko, Jason Fernandez and Jean-Michel Azzopardi for their expert analysis. I'd also like to thank you, the audience, for joining us and invite you all to accompany us every weekday at this same time.